major money within the market is rotating out of some of these winners. We saw it with names like SoftBank reallocating some of their investments into different areas of this AI trade, and that's going to put pressure on the NVIDIAs of the world. But as Joe Mazzola highlighted earlier on Opening Bell, there's still an interest from the retail trader into some of these names, and that tug of war continues to kind of have some of these names relatively range bound. To Kevin's point, perhaps we're on the verge of some sort of a breakdown or breakout for some of these names one way or the other. As far as this headline out of Foxconn, though, Diane, to me this is, one, the AI demand, but it also illustrates to me that there's probably still a fair amount of demand for some of these consumer electronics products, whether it's the iPhone, the iPad, the Kindles out of Amazon, the different gaming consoles, think Sony's PlayStation or the Xbox consoles out of Microsoft. Like, this is a company that works with basically every major tech firm to develop their products. So if they're doing well and increasing 22% year over year, it's probably illustrating that there's demand for some of these products.
Speaking of that tug of war, we've got bull versus bear coming up. The guys will get their example trade put together for NVIDIA. Will its star continue to rise? CEO Jensen Huang scheduled to speak this afternoon. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Shares of NVIDIA are pulling back after initially gaining ground today. Now sitting at around $187 a share. This comes ahead of CEO.
Oh my God, look what we're getting.
For later today, it's being called a quote special presentation. Now, analysts are still bullish on the stock. UBS reiterated its buy rating even after more than 35% jump in shares last year. The question will be, what are its ambitions this year, and how long can it maintain a stronghold on AI? All right, let's gear up for the tug of war on NVIDIA, and welcome back in our co-hosts Kevin Hinks and Alex Coffey. It is bull versus bear time. So before we get to your example trades, we got to talk about your take on NVIDIA. I know we kind of teased it a little bit earlier, going through, kind of thoughts on the state of tech. It feels like obviously a lot of eyes are going to be on this presentation today. Alex, let's start with you. What are your thoughts for NVIDIA?
Yeah, I mean, it still seems like the primary stock to look at when it comes to the overall market. It's the biggest weighting in the S&P 500. It's front and center of this AI trade. It's got the dynamic leader who's taking the stage. That could be a positive or a negative catalyst. But what really stands out to me is there's been a couple moments it's felt like over the past several months, really going back to the beginning of November after this stock made a new all-time high, where, you know, the stock was kind of on the ropes for a short period of time, and every single time buyers stepped in. And so at some point, the selling will dissipate if all else, you know, kind of continues on this trajectory, and it's basically, you know, set for a continued rally. There's a, you know, pretty stable demand that continues to come into these shares, and so once some of these bigger money players you know, stop rotating out of it, I don't see what stands in the way for this company in the medium term. And so all that being said, I look at this and say, you know, it's weathered every storm and it's passed every test, and we start the year, yeah, with maybe a little bit of weakness, but all things considered, it seems like another really, really strong year is maybe in store for NVIDIA.
You know how there's a prediction market for everything. Kalshi has a prediction on what will Jensen Huang say during NVIDIA CES. They say keynote. Now, Lisa Su is being billed as the keynote. His is being billed as a special presentation. Kevin, what's your thought when you think about NVIDIA ahead of your example trade?
Well, just look. Think of my view on this stock going into the new year is it's going to move. And I don't know which direction it's going to move. And it's already got a $6 range today. It traded as high as $193.60, and now it's down. And so I think Jensen Huang, who's going to speak at a press conference today, where he's going to release a bunch of their, you know, talk about their products. He's also on stage tomorrow with the CEO of Siemens. So he'll be doing 2 different appearances at CES. But here's the comment. Latest solutions driving innovation and product across industries is what he's going to talk about. He's expected to lay out the next phase of the AI strategy. As you know, Jensen Huang likes superlatives when he's talking about the demand for NVIDIA products. I don't expect him to give a downbeat presentation, that's for sure. So that's coming up in the next 2 days, but this stock has moved. And because why? When expectations get big, and as you know, right now it's got a market maker move, so front expiration implied volatilities are elevated. So the overall market is either going to really like
Well, I had to pull everything back. Let me see.
Expectations are incredibly high. It could be disappointed. So what I suspect for NVIDIA and a lot of these names is movement, Diane.
Okay, and speaking of movement, let's get into these example trades and what your movement is that you're looking for. So, Alex, let's start out with yours. What's your approach?
Yeah, I look at this as, like I said, if you feel this stock can make another run of its all-time highs, especially into the AI kind of earnings cycle, which AMD will kick off at the early parts of February, I looked at a call butterfly spread centered around 210. I use 210 as sort of a proxy for the all-time highs. It's just above the all-time closing high. It's just below the intraday high. And so if you use that as sort of the proxy, $15 wide, $3 debit expiring January 30th, so sort of right at the end of the month.
Market is going up the gas from higher.
A window between 198 and 222 where this can be profitable to some extent, with the best case scenario being going right to that 210 mark by the end of this month. If that happens,
they're looking for support somewhere.
To as much as $1,200 in
around this
profit.
area, they're looking
but
for
most
support.
importantly, Diane, this is a bullish strategy, looking for a test of those all-time highs and looking for that to happen by the end of the month.
Okay, Kevin, what's your thought on this one?
You know, the call butterfly is something we talk about a lot on this show, and we like it because
Market broke out.
Focuses on a target, right? And Alex's target is where he wants that stock to go between now and January 30th expiration. So sometimes we complain about butterflies because you have to be too perfect for them to really do well, and you get paid very late on some of these butterflies. But if you're right, then these things can really pay an exponential number from the debit paid. So $3, that could really turn into a multiple winner if Alex gets the direction and the duration correct.
All right, let's get into your example trade. What's your approach, Kevin?
So So mine was playing for, I think NVIDIA is going to move. It's already moved today. So I also went out to the January 30th expiration, giving myself
this area
some
right here.
duration here, 25 days. And I just
I can start
measured
breaking down.
what the expected move is, about $16. And then I looked at where the stock
Or
is. Now the stock has moved a little bit since I put this in, but I went long the iron condor, which means I don't care which direction it goes, but I want movement in either direction. And in this case, from where I determined the strikes, I bought the 200, 205 call vertical. Then I bought the 180, 175 put vertical. So $5 call vertical. Then I bought a $5 put vertical. Paid about $2.45 for that, where it's trading right there now. And what you're looking for is a move about $15 in either one of the directions, and you want this $2.45 that you paid to go closer to $5. And the detriment of this spread is no movement. If it stays in a range between $200 and $180, then this will be a losing trade because you're paid theta each day on this trade. So Diane, when I look at this trade, all I think about is I don't care which way it goes. I just want it to move.
Want it to move. So that's the example trade approach there that Kevin is taking today. Our thanks to Alex for stepping in. We'll see him again later on Next Gen, about half an hour from now. Thanks to both of our guys for their example trades on NVIDIA. It's not just about NVIDIA today. We've got cash tax coming up. AMD CEO Lisa Su set to give the keynote at the annual gathering of tech leaders at CES. What does sentiment look like around this one? Stay right here on Schwab Network. Fast Market. We'll be back after this break.
Right here. They're looking for support.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcast is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. All you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Right. Yeah. What? Yeah. What? That's right. Yeah. Yeah. How do you understand when they don't listen? Yeah. Planet Labs, they moved their price target to like $22. So I have a call on the 21 strike on PL that I had for a while. PL's just going crazy. Hey, how do you keep getting here? YouTube got mind of its own sometimes.
She kept calling me all night. You think I really care? So she's big with me all night. Yeah, but you put me on to her.
Last year was stronger, I should say. We've been
AMD.
officially bullish to our clients since about $126. So we love this. But
Alright, yeah, so I got the 21 call on PL, it's printing. The 23 call I got beat up on, but I'm hoping
you know what? They started to
I'm hoping they get towards it.
shift
I'm at
their
the average
strategy a
into
little bit. And it's looking like it's paying off. Hey, yes,
my favorite stock, Data Vault, is a dollar. Looking at it, because
they're comparable. They can hang in there. When you look at changing their business, changing their tie with NVIDIA now. NVIDIA has started to become much larger.
That's right.
They're about 75% of the market share with AI chips. So they're dominating, but the growth level between these two is the same. Intel is but AMD is competing with better chips, but also, they've kind of shifted from here's a great chip to here is the AI platform.
Data Vault just went up. It hit touch 30% today. It was down here at 50 cents. Data Vault's my favorite stock. I believe in Data Vault. I invest in Data Vault. At the bottom right here. Woo! Yeah.
Obviously, you want to get you want to sell to the hyperscaler, you want to sell to the companies that are spending. There's tons and tons of
What? Okay.
And get out there. You'll get sales now as opposed to some of their bigger chips. The MI400 and 450 are coming out in the second half of 26. That's revenue you got to wait for, but the laptop revenue you can get right away. So. They're doing a great job.
I gotta make this video real quick on short. It's a short.
Again, it's been NVIDIA.
Tell people about Data Vault. We call Data Vault down here at the bottom.
They're still number one.
Data Vault don't call us support down here.
Hey, you should consider us as well when you're considering.
Caught that whole move, 50 cent. 70% move right here.
It's a definite number one for NVIDIA, number two for AMD. Every time AMD would come out and say they've got a chip that competes with NVIDIA, NVIDIA comes out with a new chip and pulls away and increases their lead. Your data is showing a pretty neck and neck race here between them, and if that's the case, if this is pulling closer, I'm not even saying it's equal, if it's pulling closer,
right here,
then AMD is a much better value than NVIDIA. It's about one the market cap on AMD about 1/6 of NVIDIA's. So if that's the case, then
hey, look,
your other
guess what stock this is?
It's
Data Vault. Let's go, Data Vault. What I'm talking about. We're catching the bottom at 50 cent on Data Vault. Data Vault trying to go higher. Let's go.
Big day for them, and she's giving the.
You know what I'm saying? This is a dollar. It's $1.30 now.
If they're starting to pull even or come close to pull even,
look, Data Vault came on the first bull run on Data Vault over here when we found it.
The most accurate.
You know what I'm saying? Data Vault came all the way up here to $4.
Pretty equal, right? I mean, as far as consumer interest.
What is this? Right here, the slope of resistance right there. Thank you. Thank you for the slope of resistance for me.
Holding that gap.
I will find the resistance and the support.
The lead a little bit.
Every time.
As investors, you don't just say, well, what's the best
company
I'll invest in?
Right here.
No, like you said, you look at what's the valuation, what's the PE ratio, what am I buying here, how long do I have to, hold this to break even earnings, that kind of thing. And you make the decision, and when you're talking about second place, there's 1/6 that you mentioned, that's a big difference. We're not talking about 20% discount on the market cap, we're talking about 3%. You can see that.
21 PL. 21 today, PL. I ain't gonna say no more PL.
see, you know what, there is value in being second place. This isn't an all or nothing game for all the AI participants. And so AMD being a viable second place and maybe competing in first place for some of the other angles, like I talked about, that the full-on platform of AI, the laptop angle, all of that. I think that could be really big for them. Not to mention that they're really built for inference. And when you look at that, you've got training, which is basically teaching the models. And you've got inference, which is basically like you're running the models. They are doing a great job of building that. They got memory, and so everything that they're building is teaching us to there's a big gap there, but they're catching up, and companies like to be that where like they have the ability to say, oh, we're not going all in on one company. There's a problem with NVIDIA, so you don't have to in the future. And then
come on.
Very quickly, they can deploy very quickly.
That's right.
A full stack platform that AMD offers, not just chips. They offer
Hey.
all of the infrastructure needed. So they're making some smart plays. They have to have better chips than they're doing, but they're also taking different angles where they can attack it with different angles. Plus, let's not forget, this pie that we're trying to slice up is growing massively every year. So there's more stuff to go around.
Okay, Landon, let me ask you this.
There's all kind of flaws.
To your point about, I figured you would say
Yeah.
not to do it from game and listen to the
She don't get me hyped at all. But I've been trying to wipe it off. Man, data vault, let's go. Let them know, data vault. Let them know that data vault.
I think a lot of it's going to change with this electronic show. We're going to see what she has to say, what she, how the reaction is going to be. But everything that we're seeing so far, kind of on the back end of the portfolio data, pretty bullish, especially considering the rising valuation versus that monster here. I mean, you've got a benchmark of that level. You say, well, what if they caught up? What are the odds of this catching up?
Full face line dog.
From here is to get to that level.
Knock it off. Hey, what? That stuff got me nodded off. Every other cut. Oh, what? Spurs.
They're making the business play, not just, hey, who's got the best chip by 5 or 10%, but who's got the best business use case here. And I think that's really smart by them. It's a great second place kind of move, and I think it's going to pay off well for investors.
Come on.
One last thing, Landon, before we let you go. The year-over-year change in visits. There's 3 stocks on that chart. 2 of them look like they're fighting it out. And then there's Intel. And how I would describe Intel is a flying tourniquet, Landon, because that doesn't look like very good data coming out of Intel. Do you have any news of any kind, any data on Intel, any update that you can give us?
Just what you see here. I mean, it's pretty ugly. I mean, generally speaking, we like to throw in competitors. Yeah, we just came out and said, AMD and NVIDIA are basically tied up
Hey, hey. Yeah. We did it, baby.
So I looked at again, January 30th, bought the 245, 250 call vertical, and bought the 205, 200 put vertical. Yeah. So again, buying the long iron condor, playing for movement, paying theta on a daily basis for that hope for it to move either to the 250 level or down to the 200 level, right? Think about it. My short strikes are 250 and 200. With a $26 expected move, I think I said 26, I'm sorry, $24.50 expected move. That's basically right in the range of where my short strikes are. So the good news, this debit, only about $2.05 is where it's trading right now. So that's the risk on this trade.
I was born to get it, start to the finish. I'm pushing the top, manifesting the millions. I break through the ceilings. My ancestors told me I don't got no limits. My ancestors told me I don't got no limits. I was born to win it, start to the finish. I'm pushing the top, manifesting the millions. I break through the ceilings. My ancestors told me I don't got no limits. My ancestors told me I don't got no limits.
Yeah. Hearing voices in my head and they saying go get 'em. High self elevating and I go with 'em. Meditating just so I can see the bigger picture and I see the universe. Every day is getting bigger so I gotta grow with it. Staying consistent, move like the water and stay with the stillness. Ancestors with 'em, nobody could kill 'em. They stay on that bullshit, I stay with the realness and that's why they feel 'em. Look at the time, 222, this the moment that we supposed to be living right now. Stay on my grind, talking about balancing everything, not just that somebody's job. And I do my best, I never show it but I'm playing chess. Looking for knowledge and stacking up checks. I just might roll up so I never stress.
Let's go!
No, it ain't no limits on me. I kick down the door, I'm taking what's mine. No, I do not need no key. I'm standing on business. Keep it real till I'm finished. No, they want me to go. I ain't never gonna quit it.
I was born to get it, start to the finish. I'm pushing the top, manifesting the millions. I break through the ceilings. My ancestors told me I don't got no limits. Gotta think bigger. My ancestors told me I don't got no limits. Gotta think bigger.
Yeah.
I was born to win it. Start to the finish.
Let's go, PL!
Pushing the top, manifesting the millions.
Let's go!
Break through the ceilings. My ancestors told me I don't got no limits.
Let's go, PL! Pop out and show them. They try to count us out. They try to keep me with my babies. I told my babies and all them over again, PL. Hey, let's go.
Moving in my truth, connected to my roots, just like the foundation of builders. Straight from out the dirt, reflection of the earth, yeah, we the same ones as the pyramids. This shit feel like I'm a pharaoh, shooting shot, but in a bow and arrow. Spin my wings on them just like a sparrow. It take off, haters keep the smoke on my exhaust. I left Earth and felt like up on Mars. You ain't found it, I'm setting the charge. Kept it metal, but I'm about to ball. Versus sting like a hornet, they stuck in the nest off the hook, I cannot let them off.
That's right.
I'm applying the pressure to cultivate dominance, don't ask me why I'm going hard.
Whoa.
I woke up full of gratitude, thankful for all of my blessings, but I want it all. I I said I want it all.
Yes, right.
But the world I was born to get it. Start to the finish. I punch in the clock, manifesting the millions. I break through the ceilings. My ancestors told me I don't got no limits. My ancestors told me I don't got no limits. Yeah. I was born to win it. Start to the finish. I punch in the clock, manifesting the millions. I break through the ceilings. My ancestors told me I don't got no limits.
Dow still rising more than 1.5%. The Nasdaq 100 has a gain of about 0.9%. Russell 2000 matching the move that we're seeing essentially in the Dow on a percent basis, up 1.6%. Now, one of the winners in 2025, these are winners in 2026. One of those among the chip makers is Broadcom. Will that streak continue this year? Many analysts argue that it should be a member of the Mac 7. While NVIDIA has been gaining ground today, Broadcom taking a back seat. It's down more than 2%. Most analysts are in the buy camp, and none argue that you should sell the stock. Joining me now for the breakdown here at the desk is Sam Bonus for the fundamental look at Broadcom. So Broadcom, they say it should be a member of the Mac 7 to move somebody out today. What's your take on this one?
Well, maybe it could be the 8. I mean, who knows? That's what they're saying, aren't they, Diana? But yeah, look, it is under pressure today. There doesn't seem to be anything obvious news pointing to why, other than obviously we've been watching this rotation out of some of these high-flying tech stocks, what had been doing well last year, some of the rethink particularly around financing, some of the guidance. Obviously there were some questions off the back of its earnings report, despite the fact that it was good last quarter. We got that about 3 weeks ago, and then we saw that sell-off post-earnings. So we are seeing some of the steam coming out of some of the individual names as we start to have a bit of a rethink here in the back end of 2025, and seeing that moving into the new year as well. But despite the fact that Goldman has said that it's now added more out of its new year rotation to its US conviction list, and this is part of its monthly update here. It's looking at the company's dominant success position in enterprise networking silicon, which they believe will drive the market share gains in custom silicon processors from major US hyperscalers. It's keeping a focus on the shares and Now, what this basically means is that Goldman is talking about the dominant position in enterprise and networking. Basically, it's making chips that are lower than a lot of the hyperscalers are using at the moment, and dominant really refers to the fact that Goldman sees it as really taking the lead in this area, and basically they also say that it's going to take business away from competitors and sell more of its chips over time. That seems to be what the note is suggesting here. As far as hyperscalers, obviously we know that huge cloud companies...
But they must listen to you. Hey, get him off there, boy. Get him off.
They're going to be increasingly looking at full cost chips as well. Now, other analyst calls to note, I suppose, Diane, the folks over at UBS who just recently raised the enterprise target to 475 as well. They're trading at 339 in change. So there is some room for some upside here, according to very bullish analysts out there. There can be a buy rating as well on the shares. They talked about how they saw the market reaction with that recent pullback that we saw, particularly the back end of last year, was an overreaction. And as you mentioned, just in leading, Diane, I mean, no one seems to be in the sell on the pullback in this case. I mean, you've got a couple sitting on the fence here, but you do have the majority of them, the cohort of the analysts that cover this stock, I mean, talking about a buy or even strong buy. So, we are looking at this stock being up over 40% over the last 12 months. It's had a very, very impressive run. But let's just see how things shake out in 2026. Of course, with that latest report, it did look good. The fundamentals look okay. What seemed to be a bit of a worry, at least for investors, is they seemingly want to do more. They seem to be a bit cautious on the call. They did seem to have a bit of a vague tone on that call as well, particularly with respect to confirming the big customer, which is Anthropic, $11 billion order, but not giving investors that much more clarity for the payoff here. And that's really what the market is asking right now. What's the ROI? Indeed, the revenue forecast for 2026 has been hard to pinpoint. This is what it's problematic. Because they basically just say that they don't have enough visibility right now. They say that things are a moving target, so they don't know what things are going to really look like. We've got to be incredibly being so honest here, but the market doesn't have any room for disappointment. There's no sense to me what's really driving as far as, the overall trend of
I remember that. And the interesting thing I saw in this Goldman note about, when its conviction is that some of this was supported by recent Asia checks, right? And so the demand picture there looks like it's strong. And And so it seems to be the view that they're underestimating the further upside in Broadcom. Any other thoughts you want to add as it relates to either Goldman adding it to its top picks, or what you're seeing from other analysts?
You raise a really interesting point about Asia, because even Ben Emmons came out with a note the other day, and as far as the outperformance we've seen, last week in sort of technology stocks here in the US, Diane, that have largely been driven by a lot of the sort of bull case in artificial intelligence stocks over in Asia. And so, we have seen things like the South Korean Kospi, rallying hard on a lot of these kinds of names. The Japanese markets as well performing very well. Obviously it's self-reliance push as well, so things are moving in that direction, and so there is a big bull case for technology over in that region. But it's also interesting, reading through some of the commentary, some of the reporting as well, Barron's made the point that with Broadcom it is harder to forecast than peers like NVIDIA as well, because of the fact that it designs its own custom AI chips for other companies, so you're relying on very much their development schedules as far as that dependence is concerned. And the most important work, obviously, as we know, is with Google, and they are working on the GPUs, and that's where, obviously CES is going to be really interesting this week as to what they're going to be saying about the GPUs.
Oh, David Bo, where you going?
Moving forward.
How are you, David Bo? You trying to do that?
Yeah, and it'll be interesting to see how many robots we see line up at CES.
What you trying to do to you, David Bo? You trying to pull you back again?
Who's going to be center stage
They trying to pull you back. They trying to hold you back again, David Bo? What they doing to you, God?
Morning Trade Live and co-host of Market on Close with the breakdown on Broadcom. All right, let's get Kevin back in here for the example trade purposes.
That's how they're going to go fought in there.
You've been watching Broadcom, not just obviously today's move, but in the context of NVIDIA and AMD, what's the approach you're taking for the example trade?
Yeah, this is another name, Diane, that, yes, all the news is good. They came out with good earnings, but the stock is still down about $75 off its recent highs. And now, with a 50-day moving average around 361, it's about $21 below its 50-day moving average. And it looks like it could be on the verge of breaking down here. So how do we look at that? Well, again, if you think an iron condor is the right trade where you're playing for movement in either direction, that's kind of the theme of my show today, Diane, and that is, the iron condor is something where you pay daily decay to buy an out-of-the-money call vertical and out-of-the-money put vertical. So in this case,
what?
I went to the January 30th, I looked at the expected move. This is the biggest of the three, almost $32 expected move out till January 30th. So when I looked at that, lining up my strikes, I bought the 360, 370 call vertical, and then I bought the 320, 310 put vertical. So again, about $60 difference between those short strikes. The long strikes are only about $40 difference. So you're looking for a move. The difference between this and the other two, this is a $10 iron condor. So a little bigger, bigger chance, bigger profit, but also bigger risk. The theta you're paying here is bigger than the other ones. You're not looking for a range-bound trade, Diane. So I paid about $4.95. One of these spreads, either the upside call vertical or the downside put vertical, you want to go near or towards $10, Diane. This is another case, which is the theme for today's show. Movement is you want it to go towards one of the strikes. You don't care which direction. You just want it to go. You don't want it to sit in a range, Diane.
I did notice your theme today. Use your own iron condor.
What are you doing? Hey, what are you doing, bitch?
Hey, back down here. Alongside my buddy Kevin Hayes. Once again, our thanks to Alex Coffey for stepping in today. Download the Schwab Network app, available in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around, we've got Next Gen Investing with Alex Coffey and Jenny Horn coming up.
Yeah!
Schwab Bank Investor Checking. The checking account built for investors. Named highest in client satisfaction by J.D.
Yeah, move it. Hey, move that IWM up a little bit, bro. I'm about to slap somebody a little bit.
Checking account. plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live at home. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at SchwabNetwork.com.
This is going right here at the top on Data Vote.
For the stars, traveling so far, like a dragonfly, just where my head.
Welcome to Next Gen Investing, and of course, Happy New Year. I'm Jenny Bourne alongside Alex Coffey, and we are seeing some strength to kick off the first full week of trading of 2026. We are seeing some pretty gains today, led by the Russell, which is up now 1.6%. The Dow Russell up, pretty considerably today, up 1.6% as well. The Nasdaq up is shy of 1%, and the S&P 500 are smallest gainer of the week. We're still up 8.2%, so a firm green day that has not really wavered at all, despite, of course, geopolitical tensions and the headlines we got over the weekend. So, Alex, I mean, what do you make of this market to start off the unofficial 2026 year? The first real week of trading of the year.
If we were closed here, we have maybe two sessions closed higher. We were essentially at all-time highs. So, risks, headlines, concerns, earnings, New Year, whatever you want to say. Like I said, they don't lie. I mean, market doesn't lie here. I mean, we're basically at the highest point right now.
Is that what they say?
Don't lie.
Well, I don't do sorry, incorporate that in my vocabulary. But yeah, I will say that I know that the really from the market.
Let's go!
Some of the forecasts in the United States.
Boss, is that him? Piece of code is where's he at? I don't even know what's happening.
I just thought a lot of these days if it was a crude oil spike on the news, and they tend to trade off to that strength, and I think it's a good reminder. Come
here. Hey, come here. Hey. Hey, family bush on the way. Hey, go get your mans up. Tell your mans to bop, 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 bop. Ooh, buddy. Ooh, buddy. Come over here by the tree, buddy. I don't know what Frost is. He's in the snow. He just iced everybody. Let's go!
Something like this. And there's intersection between all of them, right? But when you're assessing things from a financial market impact, I think there's sort of two ways to look at this. And one is the commodity impact within the countries involved. And so who will naturally come to the forefront? I thought Pat did a good job. You discussed this earlier with me as well on Opening Bell about like the limited impact short-term wise. And then maybe longer-term impact, you could make the argument that it's maybe going to bring more supply online and it could be net positive for some of these energy companies. Whatever. I mean, those are discussions to have. You could also have the discussion about, okay, what does this do with sort of the instability, sort of the power.
Get out of here, bro. You ain't freezing that long. Like, get out of here, bro. What X you out of here? You ain't freezing bad long. My internet ain't bad like that, bro. Get out of here. I didn't pay all that much for that internet. Ain't nothing freezing over here. Get out of here. You know what I'm saying? Get out of here. Look, get out of here. Alright? Get out of here. I ain't re-editing nothing. You know, I keep editing. Y'all keep. No. Frost is the coldest when he said he was. How about that?
There's going to be short-term limited impact. But the biggest discussion is, having an impact on the ceilings of these stocks.
Bop. Another bop. Yup. Let's go with it. Let's go with it. Let's go with it. I mean, let's go with it. Let's go with it, Frost. Was that 9 moves? Let me know if you got 9 moves for somebody down there in the chat. Let me know if you got 9 moves for somebody in the chat. You get me? Come on now.
I think we should double down. Look, I'm not commenting on the emotional response, and again, any of those policy, political, or anything like that, humanitarian impact. That's a different conversation. That's not my job. But the gold moves, look, I can make it a lot easier to make an argument for what Bitcoin's higher than gold as a result of this one. That said, to your point, is it pointed out? I mean, gold has been extremely volatile recently, relative to how it had been trading over recent, and it's been in an uptrend like this. The similar things can be said about Bitcoin. Neither of these moves is abnormal to the recent trend. That said, I do think it's easier to say, hey, if there is some sort of shakiness geopolitically spike over the last 9 or so months.
It has. So we've continued to see, lower lows and lower highs for the same. We're still off of highs that were made actually about a year ago at this point by about 19%, but it's been a more slow grind.
What? What? They doing what?
Brazil today with some favorability, upgrading Costco shares to outperform from neutral with price target raised to $1,000 a share, up from $9.50. The shares have corrected about 20%, they mentioned, on these concerns that the company's membership and comp sales growth metrics are slowing. However, they do believe that Costco's trade-up activity is accelerating the first quarter premium that commenced at the average of nearly in 2
right here, that's clearly from.
He just fight back. He can't get out. He can't get out. He can't get out.
No, he whipped dirty right here, boy.
Oh, somebody let him out. They trying to whoop dirty, bro. Look at this shit, man. They need to put that dirty, bro. Dirty running, bro.
Consistency is the name of the game.
This pregame lobby, bro. They chasing this nigga.
Oh my God, get him! Get him! Get him! Yeah, yeah, where you going? Yeah, where you going? Ain't no running, yeah! Get him! Boss got a community, he said, get him! Yeah!
And that's where like a conversation about like where Walmart falls is.
Oh my God, what happened to him?
That's added to efficiency and sort of has both aspects. It has like this growth-centric side, and it also has the consistent defensive aspect. I think what the but in this time where all of these big players are investing in AI, and conversation earlier on opening bell where if you just invest in like the 4 biggest names.
He trying to fight back. He can't get out. He can't get out. He can't get out.
Come here, Dirty. Tell me what you're running to. I want to know where you was. Hey, no. You ain't about to hit my people. Get Dirty. Get him. He ain't about to hit us. Get him. Yeah. Yeah, where you going? You gonna get these hands. Yeah, we're gonna give you these hands. Yeah, let me tell you what you're running to. I wanna know where you was running to. I wanna go up there with you. Yeah, baby. Come here, man. Yeah. Yeah. Laying the smack down until it melts. Let's go! Let's go, Russell. Okay, pop out then. Okay. You know what I'm talking about, Pierre? Are you moving it again? Pierre, are you just moving the whole... Are you moving it, Pierre? Let's go!
Shifted more in this direction than had been expected. And so for that reason, seeing more and more of this, new price points to improve traffic at one point that start to reduce their margins, or perhaps that make the overall perception of their brand just seem weaker. I mean, I think that's a really interesting point, and one, hey, Domino's has been on a really nice run as of late, in contrast with everything we've seen down with Costco. And so I think it's a good thing to acknowledge, how much the company's discount before it starts to be a concern.
One of my biggest takeaways in 2025, and a lesson that I will not forget in the
Talk about what I can't do. We're gonna tell him what I can do. He telling me what I can do, what I can't do, what I ain't. Tell me what I can and can't say. How about that? How about what I tell you what I am gonna do? How about I show you what I do? How about that? How about I just show you everybody what I do? I went live for a reason. They keep telling me I do this every day. I just go live playing games and get into it. How about that? You know what I'm saying? Put me back on the chat field. How about that? You know what I'm saying? Somebody get me back on the chat field. Yeah, that's why I want to be on the chat field. I'll show them. Put me back on the chat field. That's where I want to be at. No forbidden. 403 messages. I can't figure it out all day. Come on. Hey. I need help with that. I can't get back on the chat field and do what I do best. Come here.
And to really illustrate this too, let's say, hey,
What do you think you're gonna do with that pawn? Come here.
when you start making a decision for an investment,
Come here. Let me show you something. I got a move for you. Check. Mate. Let's go, baby! Let's go! Don't you ever count Trump out! He a champion for a reason. You get me? He was a champion for a reason. He's a champion for a reason, though. I tell you that much. He was a champion for a reason. I'll tell you that much right now. People hating on him. Look, got 36 views. Come on. Where the views at then? Who like chat? Give me somebody who like chat. Who like chat? That's what I want to know. Who like chat? Man, let's go, Frost.
Neutral price target though that was trimmed to 250 down from 301. As the firm does believe its value
I'm gonna return up, boy.
entertainment product is not being reflected in its growth
Alright, hold on.
forecast. They did highlight the company's rapid fire bite-sized lesson plans that provide superior entertainment value versus the majority of these mobile gaming apps, which they also believe that Duolingo's 95% annual subscriber rate and roughly 23% or daily active user ratio demonstrate the app's superior value proposition than these mobile games.
Whoa! What? Hey, chill out. I don't even know how to start playing. Hey, chill out. Like, Tech ain't doing so good. Alright, this breaks. Getting out. And it probably will break.
Is definitely an appetite for overall growth, or roughly around what we're currently trading, I guess, based on that price. But they did highlight that while many believe that the story will go
Check is breaking down. Everything is going back at the top.
Oh! Right now being underestimated. Also, continue rising demand for memory from AI servers, which is led by Samsung has AI makes as well as Micron to help improve CapEx, but 38-gig capacity data dimension was constrained by the cooling space. This limitation is now being addressed through the acceleration of new clean rooms and very clean optimistic ones. So let's be that thing that needs to be analytics run and
Alright, they could have a little pullback and still keep on high, honestly. Around here, it could be like a bounce right into this little bully pop up it. Like, they have to pull all the way back. They will. They will pull back if they got to. But at the same time, this is like really bullish still. So I wouldn't say bearish, more bearish than bullish. This is bullish. They're going to come down here and find support around these areas. So they're going to pull it back at the top.
Consistent with just the company that makes the products that TSMC then puts together to ultimately do what NVIDIA or Micron or somebody else wants it to do. And that's essentially where ASML or Wayne Research or Applied Materials and KLA, I know they're not all the same, but that's kind of where they find themselves. And so this, again, is to me an important chart because it's performing probably how you expect it to, all things considered, given how the NVIDIAs and the Microns have performed over the last month.
Yeah, that's a really good point. And it's also a good reminder that this company is actually
Let's go, Bill! Hey. Uh-huh.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Mover with me, Diane Nicole.
288 to 295. Came back into focus because that's around where we had low several more times here recently. The overall pattern has been something of a descending triangle type shape here. We have this consistent supportive floor coupled with a downward sloping trend line beginning with those highs at 325 or so. For now though, we have seemingly broken below our blue trend line, our longer term trend line, starting near these lows that we saw from August, and not really the greatest, strongest trend line here, but it does, if you were to connect these two lows, we have now broken below that point. So if we were to look at our moving averages, we can see that our confluence, our yellow quarterly and our blue weekly EMAs come together right around 297 or so. Those line up with that trend line. So break below this confluence level has even more emphasis than it may have seemed initially here. RSI is managing to stay above that oversold area, that threshold of 30, but we are still below that 50-minute line. Finally, if we were to look at our volume profile study, this shows the trading activity, the regions where the trading concentration is highest here in volume. So right around here is 285 or so. This level stands out very obviously to the downside. You can see there's a big gulf between here and that point control area, highest trading activity area, here 258. To the upside, we do have another high concentration of trading volume here, about 305 or so. So those will be some areas to watch going forward.
Oh yeah, I'm going to give you some stuff today, and the overall market is definitely helping us grow up by 1.2% in IBM shares. So all that to be said now as we do think through trading IBM for example purposes, Alex walks through it again.
Yeah, and earnings towards the end of the month, we're trying to stay ahead of that on the calendar, but kind of looking more at the recent trade than today's trade, and using this rally today as an opportunity to establish a bear trade kind of into that earnings event. Looking at the body and put calendar spread centered around that recent low level around 288 or so. It's a 287.5 put calendar, selling Jan 16, buying Jan 23, looking to spend about 70 cents. So if you're going to do that in this $70 journey, just one way to look at it, the nice thing is how reliable this particular strategy is. So I mean, this is one way to look at it, it's a bearish way to look at it, but it makes you think stuff and maybe calculate the lows, kind of go with that more recent trend into the batteries of the back towards the end of the month. Maybe this is strategy to work out. Most importantly though, it is risk defined, and with that, you know the risk going in. $70, so it's a relatively notionally smaller trade than we saw typically. With that being said, you got me right. So you need that to happen. You'll see it peaks out there at that strike level, which is 287.5. So looking for a test of those recent lows. That happens, a chance for some return on that risk, which is $70 of risk in this example.
Yeah, to your point, just obviously one way of thinking about it and leaning into a more bear strategy, but you know, having a bullish conviction on IBM, you can definitely customize the strategy to accommodate. But our next thing today here is Adobe, and we've seen bearish demand on Adobe, especially because this actually was pretty nice earnings mover, and we've since embraced some of that strength, and again, the various analyst meetings on the latest name could be added now to the new year. All that to be said though, we've underperformed the broader software and tech world of Adobe shares, so walk us through this chart here, Rick.
Yes, underperforming a pretty weak sector, the software sector. And what you said is an important point because we did have that pop initially after earnings. You can see that that was right here, this area with our white dashed vertical line here. That was the earnings move. As often happens though, after the initial fireworks died down here, we saw that we retreated back to a support area. This green line right here marks an old significant low. Here about 333, you can see that where price hit some other notable low points going forward. Now we find ourselves at that situation once more. We hit some lows with 311, 312 or so, but for now we are able to stay at 333 support level.
Let's go, Archer! Let's go, Archer!
Its slower peers is a sign of trend degradation of
Let's go, Archer! That's what I'm talking about! Let's go, man!
Upward price action today, what we're seeing right now. Notice as well that RSI has crossed below the 50 midline here, which also provides a shift in momentum here. We did have a significant close below that 50 midline, so that would also be perhaps more evidence of a bearish trend change. When we look at volume profile, the other fly in the ointment here, so to speak, is that the point of control is very heavy trading.
sheldronfrost here. Checking in on our Archer. Let's go, Archer, baby. How you doing? How you doing? You trying to break out today? You trying to say hello to Frost? You trying to tell...
Neutral bull strategy, it's a short put being those previous lows, and so it's a 310, 305 short put vertical, expires on February 20th, so about a month and a half away, Jenny. Collected at $1.25, which means the max profit would be $125. Your break even would be $308.75, and your risks $375. But with this, you're essentially just looking at this strategy as a hopefully it's not going to go down, and you're looking for it to kind of just stabilize it.
Yeah, it's really definitely one of the stuff that's crazy when you see the strength. A lot of that strength from yesterday underperforming the overall market. But we'll leave it there with chart masters today. Coming up next, it's time to discuss Global. We're discussing all things Coinbase, and how you really may start to just mirror and enforce this week with Bitcoin futures also up now almost 5%.
Trading with Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization.
Yeah.
And track market trends with
Hey, PL, are you moving the whole market, PL? I already knew you was, bro. Let's go!
Live from Chicago, this is Trading 360. I'm Marley Davis. We track macro forces, market trends, and company news that shape investment decisions, all with expert analysis, actionable context from recent data.
I got bump my nose. Watch out. Watch out. Watch out.
Market, every trading minute, Trading 360, in-depth market coverage, straight from Chicago. Weekdays at 11 a.m.
Let's go!
Stay connected to this news markets. Download the Schwab network app and get live coverage wherever you are. Dad, I have a question for you. Sure. Can you bring that first credit back?
Brenda has established Schwab for branches in Canada. We really started with nothing. We worked hard and after he passed away, the courses we passed through, and likewise,
Hey, jump was wet, y'all.
She's with the journey, helping with these things. The grandchildren planning for their college education. Someday it'll be there too.
Nice bounce today in Bitcoin futures.
futures, which I know they're trading in tandem correlation oftentimes. It's not a perfect correlation, but walk us through the analyst feelings, a lot of the headlines that are driving the upside today, because Coinbase outperforming even nicer than Bitcoin is today.
Yeah, and obviously that's a part of the boost that we're seeing is this crypto rally that we've seen since this weekend. But a lot of it coming from the note from Goldman Sachs. They've upgraded them to buy from neutral for Coinbase. They've got a price target now of $303. That's up to $294. The price up 30% upside here. They're saying that they anticipate strong growth in cryptocurrency integration. That's one of the primary things that they're citing within traditional finance. That's why we're seeing shares of Coinbase up, more than about 7.5% right now. That's the move right now. They're saying also that the underperformance from last year, with the stock down close to 10% to 25, created an attractive entry point for investors. So several things are mentioning in this note. They also said that instead of not only margins across their brokerage, banking, wealth, and tokenization, that enhanced the competitiveness of their core business. And they also added that, quote, this growing exposure to crypto infrastructure through its subscription and services offering should dampen earnings volatility over time, which has been one of the times when we started to see some of that decoupling from the crypto prices themselves. As they think that should lessen. Now, the subscription and services segment is mentioned several times in the note. That includes the custody, stablecoins, staking, prime brokerage that expanded from about 5% of its total revenue back in 2020 to about 40% of its total revenue in 2025. They also say they continue to expect growth of about 13% annually up till 2027 as the crypto ecosystem evolves beyond trading. Obviously, regulation a big part of this adoption of some of the big banks as well. Goldman says all these points will enable more stable revenues and expansion into retail markets, and integration will be key for user adoption retention in 2026. So all in all, a very positive note, also boosted by this boost we're seeing in the crypto markets.
Yeah, well said.
Oh, false breakout was like, come on.
It's still really strong between these two, whether it's a year, 3 months, 3 years. It's very positive correlated to Bitcoin. That said, though, Mark, I think you highlighted the ever-changing landscape of, I just know, talking about where the revenue is coming from. It's not just simply crypto volume. It's these expanded products, things that are more institutional and focused, and also things that differentiate them from other companies. So the expansion of sort of a derivative offering is going to be different than some of the things you can do in other places. So it's this weird nuance I see it where it's like this product, cryptocurrency or Bitcoin, is becoming more ubiquitous, which would be net negative for a Coinbase in theory as it's more competition. So they have to expand elsewhere, and they're expanding in sort of the derivative space and other offerings to make it more tailored to a specific end user, that end user potentially being big money like institutions. So it's complex. A Coinbase, as Goldman says, I guess, best-in-class play still in crypto.
That's what they say, and they say that integration within traditional finance is really what is going to give Coinbase the edge. While you say, yes, they could create greater competition, it is being cited by Goldman as a best-in-class play. Clear Street released their top 3 fintech ideas. Coinbase is in their top 3 alongside NASDAQ and S&P Global. So we're talking big names, 2 other huge names here. We see Kathy Wood. She continues to acquire Coinbase shares across all of her ARK funds. So there are some big players who are also supporting and sort of echoing the same sentiment as Goldman here. It never hurts that it's happening at the same time as a sort of introduction. And this is not higher than I should say. And we're seeing, I think, also this renewed optimism in Bitcoin. We start every year like that. And there's a lot of things that crypto was there, and that we were way too early to get that call. Because a lot of stuff we hear can come in a lot of parts about these months, like in February and January. So, hey, these are really top today. So when we think through now trading Coinbase, Alex, I do think that the overall macro narrative is important. The Bitcoin narrative is important. And also, I think that the analysts giving a nod today is rounded it out. Also adding another, leg to this
Yeah.
Yeah, and even in its underperformance, really dating back 6 months, it has staged rallies. And so, even if it's just a short-lived rally,
Hey, I told y'all, hey, gold hurt me, but it ain't gonna hurt you. For the next 5 years, I'm looking at gold to break out, go to $90. So I'm about to buy me some shares and stay away from trading.
January 30th, 275 call. So the call calendar thread, $70 $1.75. Look for that to happen in the next couple weeks.
Yeah, and I will say 7% pop is nothing to write off, so it's definitely making a global-esque move today. So appreciate it to Marley Caden for that breakdown on what's driving Coinbase to the upside today, as well as the broader crypto asset class. Now, coming up next, we'll dive into another very volatile space, one that we discussed a bit more a few weeks back on Extra Investment, and that is meme stock trades. What we expect from this year, when we see any type of volatility, lots of these illusionary names that we want to bet.
Yeah. Come on, babies. I'm on my way.
Believe me, when it comes to investing, you'll love Carl's way. Take a left here, please. But there's a Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
Look it up here.
Where are you going?
Schwab. Stay connected to
Come on, PL.
markets.
I
Download
see you,
the Schwab
PL.
app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. Welcome back to Next Gen Investing. Tonight I'm discussing the latest from the meme stock. A meme stock, of course, that can generate high growth, high volatility, and also can oftentimes be seen as riskier investments. But to give us more breakdown and clarity of what you can expect from the meme stock trade now in 2026, I'm now talking to Dave Maza, CEO of Roundhill Investments. Dave, always appreciate your time, always appreciate you joining us on Next Gen Investing. And to start off here, I wanted to get your thoughts on really the definition of what constitutes a meme stock. How do you define this group of names?
Yeah, what's interesting, I think the definition of meme stock really changed from the 2021 period, where meme stock really first came to prominence. So during that period, it was really more about sort of Main Street fighting against Wall Street. So looking for stocks with high short interest and kind of overowned by Wall Street or hedge funds, taking out sort of names that people had affinity for, of course, GameStop and AMC. In 2025, when meme stocks kind of came back into investors' forefront, the story's a bit different. In some ways, it's actually about sort of the tip of the spear for retail investors, focusing on those speculative areas of the market, whether it's spaces in nuclear, clean energy, crypto, or kind of Bitcoin adjacent names. But at the same time, there's still some of that spirit, right? So we know the situation with Open Door, where companies sort of kind of needed a catalyst to come back into play. And we saw that a bit with Krispy Kreme and others. And so I do think retail investors continue to sort of have their ability to influence their market, put their footprint in the market in a way that we haven't really seen the past few years ago. And that's going to continue to evolve as new needs emerge in 2026.
As Roundhill manages the fund tied to this particular space, I'm sure one of the key aspects of that is the ability to be nimble. As the rotation seems to almost be how fast it takes these stocks become exciting, they can fall out of favor as quickly as it begins. How does one kind of go about that in the process of being sort of an active manager within this space?
Yeah, so some of the things that we screen for and really look for to identify a universe of stocks that have elements of a meme or have the potential to meme. is really first and foremost looking at stocks with high volatility. So inherently, meme stocks sort of need to be able to move around both positively and sometimes negatively, as we saw in fall. And then coupled with what's actually happening sort of with the retail investor community. As we've seen the growth of chat rooms, not just from Wall Street Bets and other sources of social media where people can band together, discuss their investing ideas, you really need to be able to nimble and stream those universes because, to your point, a stock can sort of come up on the radar very quickly, but then also kind of fall back down to interest. To me, it's really kind of that combination of what we're seeing with hard data and trading volumes and volatility actually coupled with, do retail investors care, and are they talking about it sort of in an outsized way in various chat rooms and forums around the web?
So as far as now gauging, like the next major meme stock frenzy, how did the retail investor behavior in 2025 influence what you're watching now for 2026?
Well, I think it's interesting. So before COVID, retail investors made up around somewhere between, depending on how you run the data, 8 to 10% of U.S. equity market volume on a daily basis. In 2025, that number was somewhere between 20 to 25%. During some periods, as high as 35%. So we used to kind of point the finger at retail and say that they don't really matter for markets. That's so far from the truth. I totally disagree with that sentiment. And some of the reason being is because retail investors actually care now. They have more information at their fingertips, the ability to sort of trade in a variety of ways, but also do so in an educated way. And so I think it's a risk for institutional investors not to focus on what retail investors are doing. But we also see that, again, when we look at some of the flow data, retail investors are, of course, still interested in some of the Magnificent Seven stocks, Tesla probably being the tip of the spear there, but a company like Palantir, and then newer, smaller,
don't tell me about Frost and Terry. Don't tell me about Frost Terry. Yeah, Frost moves the Terry. Frost is the Terry. How about that? How about Frost is the Terry? How about that?
I believe it was last week. A story titled "Everyday Traders Go from Fringe Players to Dominant Market Force," kind of illustrating this exact point you're making. But to kind of dive into what you were just talking about, which is the retail trader maybe still being really interested in the Nvidias, the Palantirs, etc., Tesla. And we see that illustrated by, one of Charles Schwab's metrics they put out monthly called the Schwab Trading Activity Index, which highlights some of the bigger net buys and net sells, and many of those names that you're highlighting are typically repeat, on those lists. What makes Tesla different than from some of these meme stocks? Is it just that institutional is also interested in it?
Yeah, well, it's interesting. Tesla is sort of, I think, a unique case for the market when we think about the influence of various cohorts of investors on it. Tesla is a company that, at the end of the day right now, they, of course, have some other businesses, but the main business is selling EVs. But as we know, the kind of premium, the valuation of that company is more, and it always has been focused on the future. The future for Tesla now is seemingly humanoid robotics, and then robotaxis, which are beginning to roll out, and that's an incredibly exciting area for that company and others. And Tesla continues to have a really, really loyal retail investor base, but also a loyal institutional investor base who believe in Elon Musk, believe in the transformation that company can bring. So to me, I think it's more about sort of the valuation premium associated with that. In similar ways, people are actually valuing the future and what could come, whether they're retail or institutional when it comes to Tesla.
Okay, so when it comes to those valuations, we talk a lot of these high growth, oftentimes seen as more meme stock type names like Palantir. Does anything give you any pause as we assess 2026 and some key names to watch here with, hyper growth, yes, but then I also argue that for that reason, pretty lofty valuations we're sitting at right now.
Yeah, so if we take a step back, I think it's really interesting. So we've been talking about valuations for a year, 2 years. Because historically, if we look at the S&P 500, the price to earnings multiple, or pick any of your multiples, are either at all-time highs or close to all-time highs. But if you actually look at the return decomposition of the S&P 500 in 2025, valuations expanded but very slightly. Much of it came from earnings growth. So when we then translate sort of a similar analysis and thinking to hyper-growth areas, a lot of it is that premium is being built in because when economic growth itself, when growth is hard to find across the markets, investors will then pay up for growth in areas that's delivering, and that's one of the reasons why we see companies with outsized revenue and earnings growth doing so, have done so well.
Take a chance to get out this top right
And so, yes, I think investors should be kind of concerned about valuations on the one hand, but that shouldn't necessarily stop us from allocating to stocks when earnings growth is there. Now, the most speculative areas of the market, so we can pick on nuclear or quantum computing. Some of those companies are going to be winners, some of those are going to be losers, because those themes are just being written now, and they're in the very early innings. So I don't think we should kind of hold our nose and just buy a stock with a P multiple 300 in some cases that we see. But if they actually have the ability to deliver on those plans, start showing a path toward material revenue and earnings growth, then I think some of those valuations actually may be justified, even if they're quite high.
Hey, maybe that's the reason to keep you on the sidelines a little last year. I think that many of those with that mindset were very wrong. There's a few names that come to mind, I'm sure that also come to your mind that, hey, valuation was maybe warranted at even very elevated levels. So, really good place to leave it. We so appreciate it. Today, of course, every time you're on it, Dave Mazza, CEO of Roundhill Investments. Now coming up next, we will discuss under 30.
Be careful right at this top.
As we are seeing its spin-off percent does start trading today. We're seeing both stocks lower. We'll dive more into what's driving that weakness coming up next.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Check. Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to the markets with Schwab
Let me see what y'all talking about over there, boy. Hey. Where y'all going?
Network.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
What moves markets? Download the Schwab Network app and get live coverage wherever you are.
Welcome back to Next Gen Investing. It's now time for Under 30. Today we are looking at Comcast as we are seeing it spin off of the sand, which does begin trading today. The official mark of course, that spin off and its completion. So now joining us is Sam Vadas, host of Morning Trade Live and Market on Close on the Schwab Network, of course. And so Sam, walk us through the details because not a huge move to the downside. It's not small either, but it's not necessarily, tied to any concerns. I think more tied to some of the nature of the spin-off.
Yeah, tied to the nature of the spin-off, perhaps tied
Get
to
them checks,
some
bro.
skepticism
I'm
around
talking about, bro.
in the media landscape right now as well. The futures
Yeah.
look like something for this company, but as far as the details are concerned, yes, at the end of the year, so Comcast now really just wrapping up its separation of this, and so it went public now on the NASDAQ of the road earlier today with ticker code VSNT. This was spun off basically to house the cable network portfolios and a lot of digital assets here. Really, this was a move by Comcast in response to a very changing media landscape, as we know very well about. There's been a massive rethink around legacy media ownership, and that certainly was what was behind this move. But this separation will allow Comcast now to apparently focus on more streaming, of course, got the Peacock. So as part of this spin-off, Comcast shareholders receiving a 1 share of Versant stock for every 25 shares of Comcast stock that they own currently. So they did make this announcement back in November 2024. So it's been about a year or so in the making, and that it did announce that it would be spinning off its cable TV networks like CNBC and MSNBC as well as its digital properties like Golf Now and Sports Engine. So as far as the stock is concerned, we're seeing it under some pressure today, but I mean, this has been a frustrating one for shareholders over the last 3 years or so.
It has been declining over the years. I mean, it hit a high around 2021, but it has since been pulling back. And so, many are wondering now what is going to come next, what is going to happen in 2026 now that we've seen this completion of this spin-off. The future, some believe, of NBC Universal needs to involve separation from Comcast as well. That was one of the takes that I heard in the market in recent days. Obviously, it had its hat in the ring as well for Warner Brothers Discovery. So that's going to be the next move, or I should say, many are wondering what the next move could be, particularly once there's a little bit more clarity, particularly on the drama that surrounds all of that. What's interesting about the spin-off of Versant as well is that you don't really see many sort of traditional media companies going public these days. That is because of the big changes that I mentioned that the industry is purely undergoing at the moment, and instead what we're seeing is very much consolidation in this space. I mean, we've seen that with Paramount Skydance, we've seen that what's going on with Warner Brothers Discovery as well. So there is a view in the market that the reaction we're seeing in Versant today is perhaps underscoring some of the skepticism around just the pure media landscape, as I mentioned. As far as this stock is concerned, look, I mean, it does very much seem to be a case where, as far as the analyst consensus is concerned, many are just waiting to see what is going to happen now, because a major cohort is basically sitting on the fence here in the hold camp. You've got just over 20 that are just basically neutral right now. There are some that are in a sort of buy, strong buy camp, but one underperform. But it does very much go to show that Wall Street isn't terribly bullish on this name right now. More analysts have sort of a more sort of view. They do think that
what you saying, Frost Radio? The Frost 121, what you talking about?
Even though it does trade actually cheaper than its peers and
come on, what you got with it, Frost?
Well. So,
man, they trying to hold me back, but Frosty on the attack. I ain't listening to the whack. Yeah, how about that? We talking about Pierre and Archer, and you know I'm a father. Yeah, and he has a daughter, and the son with 6 fingers. Man, I remember when they was born. I'm over here when they were begun. Like I said, I see the sun. Yeah, the market, we gonna run to you, because we on the beat. I ain't listening to you, I'm very unique. I be over here trying to pull up tobacco leaf. Man, I ain't going off the head, it ain't never written. Over here, you better pay attention. If you subscribe, you saw that we was on the mention. On the what? Not a mansion? We got a maids for that. You talk like this, we slap your back. Man, like I said, I was on the attack. I don't care if you run into that to my landlord. I'm never bored. I would say anything, not for a tip or donation. I'll be over here. I appreciate your participation. I don't even know what I'm saying. They said when I was young, all day I wasn't playing, even though I was studying chess and flexing. I played Halo. I was never Dexing on 2K because the 3 was wet. You talking to me? Frost, he's a vet. I live in legends. He was listening to Hyro back in high school. We do the darn thing. We are scholars in elementary way. Listen to Ray. Man, I'm the real DJ. Hey, man, you better come to me in the morning. You better subscribe. If you over there snoring, Frost is gonna wake you up. Whoa! Frost gonna wake you up though. Let's go!
From the opening bell to the closing bell.
He talking to him like that. You know what I'm saying? I'm Chad. I don't know what they were saying to him like that. You know, Frost's ice don't never melt. You know what I'm talking about? Hey, you know, you subscribe, you follow to him on TikTok. He trying to do a little bit for his babies. You know what I'm saying? Hey, we're gonna call them tonight. Today, tonight, in the morning. I don't care what they're doing. They better answer their phones and call their daddy back. You heard? Because your daddy. Oh, hey, where you going, my buddy? I know you up there. You go, hey.
So that would be a further downside area to watch.
Smart insight.
You doing, mom, on the IWL?
Streaming live and on. Schwab number, streaming 24/7. Any screen. has been with us for 25 years. Through purchasing our houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Let's go! I did not sell! I did not take profits yet! He has frosty hands! Let's go! He has frosty hands! Let's go! Let's go! Woo! Yeah! Let's go! Oh, let's go! Hey! Take me with you. Hey, where y'all leaving me? Take me with y'all. Hey, where y'all going? I want to go with you. Hey, man. They always leaving me. Boy, I don't even know what they was talking about. They Frost wasn't the coldest in the first place. Hey, boy, get out of here. I'm trying to see what they was talking about when Frost was said that he was the coldest in the first place. I don't even know what they was talking about for real. I don't even know where they at right now. They probably somewhere still asleep at 2 p.m. in the afternoon and stuff. Hey. You want, hey, boy, we were scrapping though, boy. We were scrapping in the chess field. You know what I'm talking about? We were scrapping in the chess field. Cross playing viewers, subscribers, you know what I'm saying? All the robbers, you know what I'm saying? Playing everybody. The boss is getting to it. Oh, Lordy. Oh, Lordy.
Not to be outdone, Russell 2000 has a strong gain right now, up 1.7, more than 1.7% as well. Let's take a look at some of the other price action across asset classes. Dollar a little weaker today, trading around at 98 exactly there. Gold higher, interestingly enough, catching a bit, even though we're seeing some risk on, we're seeing some inflation, or some hedging rather, with regards to the geopolitics up 3% from gold right now. Oil, higher by we'll dive into more the outlook for
Hey! You don't hear me? You heard me? Oh my God! You heard me? Yeah! Hey, hire me on there. I need a job there. Get Frostington on there. Get Sheldon Frostington on there. You know what I'm talking about? Get him on there. Yeah, Andy, yeah. Venezuela, yeah. Yeah.
economic data points that will be coming in this week. The job market seems to be what the focus is going to be. What do you want in the rest of this week on the economic front?
Any first of the week of the month, you definitely get jobs, GDP, jobless claims, and then on Friday we'll get non-farm payrolls and unemployment here. We'll get not only jobs data, but wages data as well. So we'll get something on the overall economy. We'll also get some data on inflation. So yes, whenever this first week of the month is there, that's what we watch. We watch the labor market accumulating with the non-farm payroll data at the end of the week. So a big week for economic data. We also get about 6 different reports that are delayed. Not sure if those will be important, but the non-farm payroll data always the number one data point.
Indeed, and it seems like we'll be back to our regular scheduled programming on that Friday. Over there at the studio, that needs to go back. Now let's take a look at the bigger picture with Michael Hussein, CIO and Global Head of Fixed Income Principal Asset Management, joining us here at the New York Stock Exchange. So we were just talking a little bit about the week ahead and what's coming up on the economic calendar. Jobs will obviously be essential needs this week. When you think about that and what focus has been related to the Fed recently, how much do you think it matters?
Thank you for having me, and Happy New Year. The jobs picture is really what matters today. Inflation certainly remains a little bit elevated above the Fed's target rate, but is not at that point where the Fed is really worried any longer. Clearly would rather be approaching 2% than 3%, but really the picture now is about the employment story. Is the job market continuing to deteriorate as it has done for the second half of 2025? Is there an environment as we go forward of continuing uncertainty, whether that's tariff-related, geopolitical noise now, you were talking about Venezuela, Ukraine, what are the implications for other more challenging geopolitical risks? And so the Fed is really focused on that, and we believe as a result the Fed will need to become more aggressive in order to counteract what is a continued deteriorating labor picture.
So need to become more aggressive. So do you share what seems to be the consensus view that we will get more than one rate cut this year?
Yes, and we have 2 priced in now, and it seems really likely that that's the floor. 2 is the minimum. The likelihood of the Fed moving with the new chairman of the Federal Reserve Board to 3 or even 4 cuts this year is not out of the question.
Okay, so you see, taking that in, and I guess I hear what you're saying about 2 potentially happening this year, but 2 being the floor. The reason I have questions that come up about 3 or 4 is I remember, was it 2 years ago when the news we were going to look at like 6 to 8 cuts, and that did not happen, obviously. So what supports that viewpoint? I know you're saying a new head of the Fed, so you think that the next head will be more likely, no matter who it is, to pursue more rate cuts than what it seems like is penciled in right now.
Yeah, I think that's the way that's the starting point, is that the new Fed chair, no matter who it is, will tend to have that view that's more aligned with the Trump administration, which is interest rates need to come down. That's reflective of some weakening in economic data, whether that's job related, we're just talking about ISM. A little bit of an objective of lowering the cost of financing the government as we continue to increase the debt burden. Lower interest rates certainly help there. But also there is some justification. There's justification with the labor picture. There's justification with that the economy is moderating, maybe not to a level which is worrisome, that's recessionary, but worrisome enough that the Fed can move down to what we would consider a neutral policy rate.
Okay.
Neutral policy rate doesn't necessarily mean where we were at 5%, or even at 0 where we were a few years back, but it's somewhere between 2 3/4 and 3%. And that's where the economy is no longer receiving stimulus or having restriction as a result of interest rates set by the Fed. And that's where we think the Fed needs to get to in rather short order. So we see this 2, 3 cuts happening in the first half of the year, maybe with a 4th coming if the labor picture deteriorates further.
Okay, and we'll certainly get more information on that both come Wednesday and Friday of this week when we get both ADP and farm payrolls report where we're finally back on track, which I'm glad for. I know a lot of people are glad. Because then we'll get to process it better because, it's not backward looking to the degree that the late data was, or belated data, I should say, say was, when you think about what you cover and your across fixed income, I asked another guest who has a similar look across the space, how you would grade fixed income for 2025 and what your expectation is for 2026. So how would you grade it?
So 2025 was a great year for fixed income. It was for equities. It was for pretty much everything.
Is that an A grade?
That's an A grade. You get a near double-digit return for fixed income. I call that an A.
Yeah.
And so as we go into 2026, there certainly is less upside, but there still is upside in our mind. Not only are you entering into a market that has reasonable income characteristics, i.e. you get a nice yield by buying a fixed income portfolio, but also if we're right and the Fed does tend to be a bit more aggressive than what's priced in, traditionally the entirety of the yield curve comes down. And that may be in more of a steepening bias, i.e. the front end outperforms the back end, but you get positive total return from the entirety of the fixed income market. When you add to it that corporate credit, which makes up a large percentage of the overall fixed income market, is really healthy. Companies are healthier than they've been in many decades. You can see that high yield, investment grade. The risks of defaults or downgrades are much lower today. And so the short version is yes, we're pretty optimistic about both the income potential as well as the total return potential for fixed income in 26.
Why do you see the risk as being more muted now today compared to what's the time frame that you're comparing?
If you go back like 15 years ago and you look at the high yield bond market, it was 26% triple C issuers. In other words, right at the bottom of the quality spec. Today, it's down to about 10 or 11%. Those companies didn't disappear, they moved into the private markets, and so what that's meant is that the overall high yield market is a much higher quality today than it was 10 or 15 years ago. And those companies, even at the single B and the double B, have been able to enjoy lower borrowing costs for the last 5 years. And so they've been able to refinance their debt and put themselves in a really attractive position to be able to weather any kind of economic downturn. And so, yes, spreads are tight. Valuations may be at what are people considering historic extremes, but that doesn't mean that spreads have to widen. That doesn't mean that you get a negative total return from that part of the fixed income market.
And isn't some of the point of the exposure to fixed income is protection from risk?
No doubt. Like, it would be nice to see that negative correlation with equities and fixed incomes re-emerge at some point. The reality is we used to think when equities go down,
yes,
we wanted
exactly. That is what used to be one time.
And that's kind of broken. Our view is that as we go forward, the likelihood of having that protection, i.e. that income, as well as more duration, that protection you're referring to, in 26 or 27, if you do see the equity market stumble, if you do see the economy stumble, then you may be in a position to see that fixed income diversification benefit really play out.
All right, Michael, thank you. We'll leave our conversation for now.
Thank you.
This is Michael Bousset, CIO and Global Head of Fixed Income Principal Asset Management. Now, we've got Options Corner. Rick Duquette joins us to highlight unusual options activity of the day and how investors are looking to trade on recent news of Tesla. For Macron and Wells Fargo. Stay with us.
getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with the communication coach. It's interactive learning at its finest. Tune in live or on demand. Go to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com. Welcome back to the Watch the Time Now for Options Corner, where we analyze unusual options trades seen throughout the day. That's what we're going to bring to Kathleen, the market technician here on the network. Now, let's talk the vehicle sector. EV, BYD surpassed Tesla last week as the global EV sales team. They had pretty powerful numbers after those 2025 delivery numbers. One trader, though, we found making a large neutral to bearish trade. Tell us about this one.
Well, sure. And, not really a lot of specific news for Tesla other than what you summed up there. And what we see with this trade here is perhaps it is neutral bearish if it is a standalone trade, but in this case, minus 12,458, March 2455 calls at a $41 credit. This could be a cover call type strategy that is being paired with a large existing stock position here. Either way, though, the scale of this particular trade is very, very large here, not only in terms of the quantity, the volume of the options here, but the dollar amount. This is about a $51 million credit received here for this trade, and this isn't an opening trade, mind you. I try to find opening trades typically. The volume far exceeded the open interest here in this particular option, so this would be a situation where there would be unlimited max loss potentially if it were indeed a standalone short call here. That would make it quite a risky type of trade to make here versus a covered call, which would be more of a conservative type of trade. So now we can see though as well that the break even for this one, 496 or so, about 8.8% to the upside. The expected move for this same time horizon, 74 days to expiration, about 19.5%. So well within the boundary of that expected move here. Sizzle and Tesla options today about 1.2, so slightly elevated activity. And this trade was almost 1% of the total market. So when there's a 1.4 million options changing hands so far at the time I checked, that's a significant percentage there, Diane.
Talk about Freeport McMoran. You found some activity there. That stock higher right now. It hit a new 52-week high today. You found a trader making a bullish bet on this name. Tell us about this.
Yeah, again, not really any specific news about this one today, but the stock's up about 40% in the past 30 trading days. A really sharp rally here that we have seen in tandem with this explosive move to the upside in gold, silver, palladium, platinum, etc. here. So this one here, this trade plus 7,500, June 18th. 55 strike calls at a 549 debit, perhaps not quite at the scale of our last trade, but a $4.1 million debit paid, a very large dollar amount once again here. Now, as I said, I do typically try to find opening trades. I wasn't 100% sure this one was an opening trade here, but there was no obvious corresponding trade that would suggest it was a closing trade, and it was such an interesting standout in terms of the typical activity you see in this name and the dollar amount here that I wanted to at least throw it out there here. So max loss would be that $4.1 million debit paid, as is the case with long calls in general here. Unlimited max profit potentially as well. So with this one, the break even would be 60.49, about 12% or so to the upside. The expected move is almost twice that though, about 23% or so plus or minus. A longer time horizon as well, 164 days out for this one. And this trade was about almost 9% of the total volume in FCX today. The Sizzle, 2.7 times the 5-day options volume for this name.
Let's talk about what you're watching in the financial
terms of developments with Wells Fargo, a couple of price target raises and so forth here. They did also close a big deal to sell their railway operating lease portfolio today for about $4.2 billion. So those are just a couple more minor headlines here, but very strong chart once again. In this case, it's a trade that's much like our first trade here, selling calls. So minus 19,165, March 20th, 105 strike calls at a 150 credit. So again, perhaps paired with existing stock to make a cover call type of trade here. Much smaller scale than our first one, but again, still a very large dollar amount. About a $3 million credit received here. We can see as well the underlying price when it was done was about 97 or so. That would have meant that the break even of 106.60 would be about 9.9% to the upside, the expected move. Not too far beyond that, only about a 10.6%. So this one would be looking for things to kind of stay within that boundary. It's kind of at the upper edge of where the market is expecting this one to be moving around in during that same time horizon, about 74 days to expiration. And this was our biggest relatively sized trade of all of our three today here. This trade was about 28% of the total options volume in Wells Fargo today. Sizzle 4.7. This is the most elevated name of the three as well.
All right, thank you, Rick. So let's talk about this unusual options activity. That is the dude of the day himself, Rick Duquette. Coming up, we'll dive into the autonomous driving and specifically trucking world with the CEO of Kodiak AI. Keep in mind, this is front and center this week as CES kicks off. Watch this. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves that are driving the price action, from Fed policy to global growth to inflation threats and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. EverlySchwab.com/coaching and start learning today.
I'm Patty Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at SchwabNetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Schwab, a modern approach to wealth management.
Welcome back to Washington. Thank you all live before the New York Stock Exchange. Let's take a look at a few movers in the market right now. Coinbase still higher today as Bitcoin rallies. That's Coinbase rallying more than 9%. Also comes the Goldman Sachs upgraded to a buy from neutral. It raised its price target to 303. Analysts view Coinbase as a quote best-in-class play for the growth of crypto infrastructure. Meantime, Comcast is lower today after it spun off its cable network. The new company dubbed Versant Media kicked off trading on the NASDAQ under ticker VSNT. Versant Network includes CNBC, NBC Now, formerly MSNBC, USA Network, and Entertainment. Time now to welcome in our next guest from Autonomy, executive that relates to the future of trucking. We've got Don Burnett, founder and CEO of Kodiak AI. Don, thank you so much for joining us. It's good to see you again. So you all, let's start with the big announcement that you all have. You're announcing this partnership with Bosch. This involves scaling manufacturing production-grade autonomous platform in plain speak for the average retail investor at home. What's that mean?
Yeah, this is a really exciting moment in the self-driving industry, particularly in the self-driving trucking industry. You're bringing together two of the leaders in the automotive space, Bosch being the largest supplier of automotive components in the world, along with Kodiak, who's at the forefront of driverless delivery. And really what this enables is for Kodiak and the Kodiak driver technology, which is our AI solution, to go to the next level in terms of scale. You know, Bosch brings sophistication and experience in providing automotive components that are fully validated at scale, and that's really going to enable the Kodiak driver solution to scale dramatically over time.
Let's talk a little bit about a milestone that I know that you all have been counting, 3 million miles. Tell me why that matters. What is significant about that milestone, especially for someone who does not live in the world of autonomy?
There's a lot of talk about AI lately, and one of the things about the physical AI world, self-driving is really the tip of the spear when it comes to physical AI. And so the challenge there is gathering a lot of data. It's not as easy to get as just parsing the internet or reading a lot of information online. You have to actually go out, drive the miles, collect the data in order to improve your algorithms, train these large models and train these systems. So it's really important that you have a lot of experience under your belt. You have your vehicles out there on the road gathering data across multiple different types of landscapes and in lots of different environments on a day-in-day-out basis. And having driven over 3 million miles gives Kodiak leverage in our ability to train these large models to produce a safe, autonomous solution.
Let's talk about the future, because we're in a week where we're kicking off CES, and I know that is important for you all. What are you what message are you trying to send this week, especially as it relates to the future of autonomous driving for long-haul trucking?
Really, the number one message is autonomy is here. I think people are seeing that in their daily lives, depending on where you live, in the passenger car space. But what most people don't realize is that we already have fully driverless trucks out on the road today. We have deployed driverless solutions with customers that are running 24/7 with nobody in the cab. It's here now, and it's starting to scale. So really, this marks the inflection point for the self-driving trucking industry, and Kodiak is definitely leading the charge. And beyond,